The MACD indicator is probably one of the best, if not the best indicator in the market, because firstly, it combines multiple indicators into one indicator, which makes it very, very simple for you to trade using the MACD, and it makes it easier for you to identify high probability trades. So in this video, I'm going to show you 3 secrets or 3 ways that you can use the MACD to get high probability trades in the market. So the first thing we're going to talk about how to use the MACD to identify high momentum and high probability trends. Number 2, how you can catch good reversal trades on different area of values like support and resistance using the MACD as your confluence. And also I'm going to show you different examples of high probability trades that you can place and that you can use right now to make money in the market. So let's get started.
Before we move forward, guys, I just want to say, if you are trading these strategies, you need to be able to be consistent. Firstly, you want to trade when there is no high impact news. So how do you know that? You can know that by going to a website called fastable.com, and fastable.com is going to give you all the news that are going to come up in the market. And if there is high impact news that are shown by 3 stars here, you need to stay away from the market. Also on fastable.com, you can get analysis from pro traders who are analyzing the market, and they give you what they think is going to happen. Also, if you go to their website and go to signals, you can see that there are AI signals that are there. You can use this signal to give you a head start of what you need to be doing in the market. Please remember that if you are trading based on signals, you need to be careful with your risk management. You need to know how much are you risking in that particular trade. So visit fastable.com using the link in the description, and if you do that, one of you guys is going to win a prize that is going to come up soon.
I always say, if you want to make money in the market, the first thing that you want to do when you open your charts or when you start analyzing any instrument is by starting by knowing the trend of the market. And the trend of the market, there's different ways to find the trend of the market. And one of the easiest ways is to use the moving averages. So the moving average shows you the average direction of the market. But then the moving average can go in depth to create the MACD. Basically, the MACD is a combination of different moving averages. And these moving averages are the 26 moving averages and the 9-period moving averages. So if we go into the settings of the MACD, we are going to see that we have the MACD line, which is the blue line on the chart. So the blue line is the MACD line. So the MACD line is created by the 26-period moving averages. And then, so the MACD combines different moving averages to create its properties and its moving averages. So it creates 3 things. Number 1 is the MACD line. Number 2 is the signal line. And number 3 is the histogram. So the MACD line is going to be the difference between the 26 moving averages and the 9-period moving average, depending on which one are you using as the slow and the fast. You can change these settings. And then the signal line is the average of that number that you just created the MACD line with. And then the histogram is going to show you what is the momentum of the market at that point. Now, the general rule of trading the MACD line is just trading on the crossover of the MACD line and the signal line. For example, if you look at this market, you are going to see that when the MACD line crossed the signal line right here, going to the downside, we see the market going to the downside. Here you can see when the MACD line crossed above, which is the blue line, the orange line is the signal line. So when the MACD crosses above the signal, we saw the market pushing to the upside. Here again, we saw the same thing. The market pushes to the upside. So this movement is not going to be a very big move. It's not like a trend that you are going to ride for days, but you can get 3, 4, 5, 6 candles, or you can get 20, 30, 40 pips from these moves depending on the time frame that you are trading with. So the first thing that I want to see when I'm placing the trade is the direction of where the market is likely to go. So let me show you a good example right here. Let's say we have the market which looks like this, and we have this MACD which have just crossed below the signal line. So when this happens, most of the time we know that the market is likely to push to the downside. So when the market is likely to push to the downside, we are going to, number one, see the histogram change from green to red. So if the market is going to the downside, the histogram is going to change either to green to red. So if the market wants to go to the upside, when the crossover goes to the upside, the MACD, the histogram, is going to change from red to green. So here the MACD just changed from green to red. So I know that from this point, I'm going to likely get about 20 pips right here. So I'm likely going to get maybe this kind of a move here. It's not going to be very big. Maybe it's going to be this level of a move right here. So getting this level of a move right here is very important for us as traders. If you get this number of pips consistently, or at least more than we lose, we are going to make money in the market. So let's see how we do this. So once we know that, okay, for the next like 5 candles, we are going to get market going to the downside, we can now start looking for other factors of getting into the market. It can be breakouts like this. It can be break and retest. So we can either wait for the market to come back into this zone right here before it pushes to the downside. I'll show you a step-by-step strategy in a minute of how we are going to get high probability trades with this. But in this case, you can see that after this crossover, the market pulls back, as I said, and then now it starts to move to the downside. It will likely go for a little bit more or even less, but then you can see that the market is moving nicely into our anticipated area right here. So this is a general direction of the market. I didn't say you should place a trade when it crosses over, but you can get the general direction of where the market is likely to go in the next few minutes. This is because the MACD shows momentum. That's the number one goal of the MACD. It shows you momentum in the market. Now here's another example. We can see that the MACD is crossing to the upside right here, and we're starting to see a green gram here. And if you can manage to get this type of movements, if you can manage to at least predict if the market is likely to go to the upside or to the downside, then if you get that, you can start looking for entry reasons, for you to confirm a buy order, or you can know, do I need to swing trade this? Do I need to scalp this trade? Just because the goal of a trader is just to get in, get out in a few minutes with profits. So knowing this will help you a lot. Now, before I show you a step-by-step strategy, I want to talk first about something that you guys are not doing, which you need to be doing if you really want to be successful. You see, every time I come up with these strategies and I share them with you, and some people say, this strategy is working, this one is not working, this strategy doesn't work. Some will even say your strategies never work, you're a scam or something like that. And the thing is, I want to encourage you guys to, whenever you see a strategy that I post right here, do not just go and take that strategy and put your real money into it. This is not a financial advice channel. This is an educational channel, and the reason why I share these strategies with you is because I know that by sharing, I become even better with them, because I can't preach something that I don't do. So if I teach you to have good trading psychology, that means for me, I need to have good trading psychology, because I need to lead by example. If I teach you to stick to the plan, I need to stick to the plan myself. So this channel is not only about helping you, it's also about helping me. I also read the comments. I also discuss in our groups, forums, and we are also going to see that I'm not that maybe a guru that is going to say, okay, this is the best thing, this is going to make you thousands and millions of dollars. Even though I create trading educational videos, I'm also learning, and also I'm evolving. And the best way for me to learn is using what is called back testing. So I want you guys to, every time I post a strategy, these are the strategy that I do my own research. I see them in forums. I talk to traders, because I have a lot of friends now because of the internet, of course. And we talk about about trading, there's a lot of forums. I'm active in a lot of trading communities, and I get these strategies from different people. And the reason why I share them with you here is because I want you guys to be also included in the process of learning and enjoying this thing. So the best thing about backtesting is that when you backtest your strategy, you are not only knowing the win rate of your strategy, you are also knowing the average performance of your strategy, the win rate that you get, the average risk to reward ratio that you need. You know also the performance, how much drawdown am I likely to going to get, because when you trade like 100 trades through backtesting, you can know on average how much drawdown are you likely going to get. And also it can help you to make the mistakes. If you think you don't make mistakes in backtesting, just go and try to backtest a strategy for 100 times and see if you don't get 3 or 4 times when you catch yourself trying to cheat and trying to increase the win rate of your strategy, even if you know that this is just the back testing. And that is going to show you one of the reasons why you lose money in the market. So enough of the rant. Let's just finish up the video by me explaining to you a step-by-step strategy that you can use the MACD to make money in the market. The same strategy that I use myself. So if you look on this channel, there's a video that I posted, which is the biggest video on this channel, where I was using the MACD strategy to grow a small account. And that strategy, I was using MetaTrader 5. So now I want to show you how you can use the same strategy using TradingView, because it's a little bit different. So this is an example of the British Australian dollar, and at around 9 a.m. So when this market was moving, you can see that the market is moving and the MACD line is about to cross the signal line, right? And we are waiting for the market to cross above the signal line. So when it crosses, right, we are going to get a histogram. A histogram is going to change to green because it's crossing above. You can see here, the MACD line crosses above, and then the histogram is now green. And what does this mean? We said when this happens, we know that the market is likely to go to the upside, at least for a few more pips. At least for a few more pips. So when this happens, what do we want to do? We want to enter this trade, but we don't just want to enter at any point. We want to look to the left. Always when you're trading and you are using these techniques, look to the left and see if there is anything that supports your bias. For example, if there is any confluence, are you on an area of value? Are you on a strong Fibonacci level? Are you on a trend line? Anything that validates and that increases the chance, because the more confluence you try to get, the less trades you will get, of course, but the more accurate you become. So if you look back, you are going to see that this is happening exactly on a strong level of structure. What is a strong level of structure? It is a level that has been tested multiple times by the market. So you can see the market have been trying to break this zone multiple times and it fails. If I want to go even further with this, I can even come up with some reasons of why this can be a good trade. You can see that from here, you can draw a trend line here, and this becomes a triangle pattern, which we wait for the market to break above this zone and then we buy. So what we would be doing here is we would be simply waiting for the market to break here and buy. So if you are on our Telegram channel, you might have realized that most of the time when I share my setups, I share setups of the things that looks like this, the triangle pattern, the double tops and double bottoms, this type of MACD strategies, because these are the techniques that I use personally that I'm sharing with you right now. So most likely the market is going to go where the MACD is moving to, right? So in this case, you can see the market is starting to move to the upside, but then it came back again to touch this zone again. You can see here the market came back to test for the third time, right? So you could have placed on a double bottom, you would have placed on a breakout trade, you could have even placed right here after this breakout right here, but I don't want to complicate things right here, because I said once you see this happening, this crossover is the first thing that you want to see, right? When this crossover happens, look to the left, look if you are on the zone that may support you, and then you just want to place your trades without much hesitation, because if you try to get too much confluence, again, it's gonna disturb a lot of your trades. So this trade moved on, and maybe it went on to lose or to win. We will see that later. But now here's another example of a good trade that you could have placed. Yesterday at around 1 p.m., the market was moving and it was going to the upside. And then we see a crossover of the MACD and the signal line. And this crossover is going to the downside. And since this crossover is going to the downside, we also look at our histogram and see that our histogram have created the first red zone. So if this zone have just been red, right, you can see that most times when the zone it becomes red, it stays red for a little while. When it becomes green, it stays green for a little while. You can see right here, you can confirm that, right? So since it's just became red, we want to be selling this trade, and we see the crossover also is going to the downside, right? But we look into our charts and then we look left. Are we on a level of structure? Yes, we are. Why? Because we can see the market touching here, and then now the market touches again this zone. This is the same zone, and we're expecting this zone to help us for the market to drop to the downside. And the reason why this can work is also you can take this as a double top, taking this as the first top right here, and then this second part as the second top, or a triple top. Then the main reason is that this is an area of value. This is a zone where the market you have tested multiple times, and also as a confirmation we have a shooting star candlestick pattern here. If you can see, this is just another confirmation because we want multiple confluences, right? So this is just another confirmation. So you can see there's a shooting star candle here, and it shows you that the market will likely push to the downside. So also the MACD crosses to the downside, the histogram just went red. So what's the next step here? Placing a trade, and if it wins, it wins. If it loses, you wait for the next one. I am not here to give you a lot of hope and say you are going to make thousands of dollars. It takes a lot of luck and a lot of skill. It takes also a lot of determination and focus, because the hardest part of most people is waiting for trades. You see, when most people get into the market, when you deposit money into the market, most people just want to use that money, trade as fast as possible, make money as fast as possible. But these two examples, you can see the last setup happened today at 9 a.m. The last setup that we got was yesterday at 1 p.m. So are you going to be a person who is going to wait for almost a day without placing a trade? Or are you going to change the strategy simply because you just want to enter into the market? It comes down to your trading psychology, which is something that I think you should focus on learning if you want to become successful as a trader. Now, here's another example again. This was 5 a.m. yesterday. So yesterday, there was two trades, 5 a.m., 1 p.m. and then today by 9 a.m. If you look at this trade right here, you can see that the MACD line is about to cross below the signal line right here. We can all agree that. And as the market moved, we saw the market pushing below, right? The MACD crossing below and the histogram becoming red. The first time when the histogram becomes red, what happens is we look into the charts. We say, okay, the MACD is crossing to the downside and the histogram is just turned into red. So let's look for selling. But before we sell, let's look into the actual market and see if we are at any area of value. This area of value or this support and resistance zone doesn't have a specific size. You just want to see if this looks like the same zone, which is exactly what I did right here. So you can see the first crossover was way above here at this point, and the next crossover is way below here. But then the zone is still the same. So now what is this? What is the next step we do? Is we are looking to sell, right? So we sell. You put your stop loss above this zone, because if the market reverses, you want this zone to help you as the market pushes to the downside. So we do this. We put our 1-to-2 risk to reward ratio. If we get 1-to-1, we move our stop loss to break even. That's the approach that I'm doing these days, right? So let's see what happens here. Most likely, the market is going to either hit your stop loss or your take profit, whatever it does. But this is a high probability trades, and as you can see from these examples, the market is going to likely push into any zones that it have pushed to before. So when it gets to that zone, you need confirmation. You need to look left and see if there is confirmation of whether the market is going to win or lose, right? So in this case, you can see that the market is pushing up and down and is playing with your emotions. Most likely, most people are going to exit this trade, especially when the market reversed back up right here. So look what happened here. The market keep going and you were most likely to lose this trade, okay? You might be thinking, okay, Courage, why telling us about losing trades? Well, this strategy gives me winning trades and also losing trades. It's up to me to determine the risk to reward ratio, and also it takes me a lot of patience to wait and trade these trades flawlessly, so that when I lose, I know that it's the strategy, it's not my own fault. And also, you are not going to win 100% of the time. Every time when you're placing a trade, we make mistakes of thinking, okay, this is a get rich quick trading business. I'm going to make money as fast as possible. It doesn't work like that. Some of the trades are going to lose, which is why I talked about the importance of backtesting your trades. Now, let me show you another example so that you can get this really dialed in. So looking at the market right now, you can see that this was a day before yesterday, and this was around 1600 hours. So as the market was moving and it was trending to the upside, right? We are waiting for the market to show us that the MACD is ready to move to the upside, right? So we are waiting for the crossover. Right now we have a crossover right now. I'm a little bit late here to catch this, but once we get this crossover, so this crossover happened around at this candle right here. Once the crossover happens, we are looking to buy. Why? Because the crossover is going to the upside, so the MACD line is crossing to the upside of the signal line. Number two, the histogram have just turned into green, right? And then we also see to the left that we have a zone which have been tested multiple times, which is this zone right here. And this is the third time that the zone was tested. And this is where we should have placed our trade. All right. So after this, you could have bought here. I'm a little bit late. Forgive me for that. And then we put our stop loss below this zone, so that if the market pushes lower, this zone can either help us for the market to bounce again. And then you can see 1 to 2 risk to reward ratio. If the market moves 1 to 1, you break even your stop loss. You move your stop loss to go and break even. Most of the time, these trades is going to go in your direction for most of the time. If the trade goes wrong, most of the time you are going to get more break-even trades than losing trades, because when the crossover happens, the market most of the time is going to just make that move from the crossover. If it reverses, it will reverse, but it will reverse maybe after you placed your stop loss to break even. And when it goes to take profit, you make maximum profits. As you can see right here, you could have made, this is about what? So let's say you moved your stop loss maybe to this point earlier. This was going to be around 1 to 8 risk to reward ratio, which is not realistic, but I'm just saying if you manage to move your stop losses to break even fast and you don't get caught by those pullbacks, most of the time you are going to profit using this, and you're going to get good risk to reward ratios. If you guys enjoyed this video, I need you to check out this video on this channel again, because this is my latest video and this have more value on how to trade the market and how to place high probability trades and make money in the forex market. Thank you for watching. If you are new to the channel, subscribe. If you like this video, make sure you hit that like button, and I'll see you in the next one.